Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profit Daily. I am Brijesh Bhatia. I wish all our subscribers and viewers the Happy Diwali and prosperous New Year. As it's the season of festive, an investor will be looking for the Diwali picks in Samvat 2079. Well, this year has been, I would say, a mixed bag for bulls and bears both. We saw markets hitting 18,900, 18,600 as an all-time high, fell back towards 15,200, came back very, very strongly towards 18,300 levels, 18,200 levels, back towards 17,000, 16,450, 16,700 levels onto the downside. And it's been a swing for Indian markets. Importantly, what has been much positive is that India has been outperforming against its global peers. Well, Dow Jones is trading at around 52-week lows. S&P 500 is trading at 2 years low. NASDAQ is trading at 2 years low. Indian markets have been very bullish and outperforming against its global peers. We saw inflation trending at higher levels, dollar index trading at 20 years high. Again, inflation being at 1981 levels, which is around 40 levels, higher levels, and interest rate coming back very strongly onto the positive side. And the importantly why equity markets fell was money moved from equity markets to the interest sensitive asset class, which is the debt market, and the outflows from equities to the debt markets have been at the higher level. What could change into the next year or the next summer, I would say 2079. I guess now the interest rate sensitive, where the Fed has highlighted that it could continue raise its interest rate in 2023 as well. So I think that is being priced in now, and most of the cream is being taken by the debt players. So they would be looking for low risk strategies now rather than looking at a high risk strategies where the cream has been taken by the interest rate moves. I think we may see money coming back into the US markets probably in the first half of the 2023, which is another 3 to 6 months, and the momentum can be again shifting to the bullish side onto the US markets as well as the European markets. And do not forget, India is one of the outperforming equity markets into the world now. Even if you look at the Asian indices or the MSCI Emerging Market Index, India has been one of the outperforming against the EM as well. So yes, we are in a better position or better place when it comes to the investments into the equities, and most of the FIIs may be planning to come back into the Indian market. So we have seen a huge outflow right into the whole year. I guess apart from September 2022, most of August 2022, most of the months into this somewhat 2017 has been where the FII cash has been on a negative side. At the same time, DIs have been coming back very strongly. So Indian investors are looking at a huge chunk of investments via mutual funds or via ETFs, which highlights that the investment scenarios are changing into the Indian markets. Well, coming on to the topic, what are the picks for Diwali? I'll be discussing two sectors where I believe the investment should be there for next summer 2070, next summer, which is summer 2079. And the two sectors are IT and banks. So let's start with the IT first. So if you look at the first chart, this is a weekly scale of IT index chart, Indian IT index chart. And if you look at this blue line, which is the average of 34 monthly low average. So this is a monthly chart. If you just look at every time it tests around 34 monthly average, the low levels, the momentum is consolidated for a quite few months, and then a rally starts. Now, if you look at right from the IT index from the start of 2022 has been down over 30% now, and look at the consolidation happening right at around 34 exponential moving average on monthly chart. Though if I just look at the quarterly numbers which are out by TCS, Infosys, Wipro, apart from Wipro, TCS and Infosys have beaten the street estimates, and we have seen positive signs coming up from the IT companies now. Though there is a chance of recession, but IT industries believe that that is priced in now, and most of the or I would say the worst is behind for the IT industries. Remember, IT industry was one of the top performing. I would say the sector in 2020 when the lockdown happened, and pharma and the IT were two sectors which have seen a huge rally. 2021-22 was silent for the pharma as well as the IT, but now I think IT is very much ready. If we look at the post-DI Infosys and TCS results, IT is showing some sign of positive momentum. And if I just look at the second chart, this is the daily using the top down approach. Look at this structure. This is a Wyckoff theory, which I believe the bottom formation is in place for the in IT industry. If I just look at the start right from the around highs of around 38-39,000, where the selling pressure was there, we have seen around 26-27,000 levels onto the IT index. Now the bottom structure is in place, and these two red lines, if it taken out, the short term hurdle for the IT index. And as per this theory, once this taken out around 28 to 30,000 has been taken out convincingly, we may see a fast and furious rally coming into the IT index. And I'm looking for again back towards 37-38,000 levels. And from this current level, I'm expecting around 25 to 30% uptick into the IT industry or IT index as an investment. So you should keep a watch on the stocks which have been picking up a very outperforming into the IT index. What could drive IT index onto the higher side? And if I just look at one is the dollar, which is been depreciating, and depreciating dollar is depreciating rupee against the dollar is an advantage for the IT industries. Second is the NASDAQ. So if I just look at the NASDAQ chart, the similar structure what IT index has been showing is be coming from the NASDAQ. So we are follower of the IT industry is the follower of the NASDAQ chart, and if you look at the similar structure has been forming onto the NASDAQ as well. So NASDAQ is down by around 30% from its high. Now the bottoming formation is in place for the IT industries as well. And NASDAQ, if you look at the Wyckoff theory is coming very stronger, and if you look at the momentum right from the lower level, the V-shaped recovery and the fast V-shaped recovery indicates that the short-term bottom or the medium-term bottom can be in place for NASDAQ, which could again boost IT industry into the Indian market. So first pick is the IT sector you should look at. Second is the banking space, which I'm looking at. So we'll be dividing banking into two, the private and PSUs. And if you remember a few months back, I've done a video on PSU saying that this decade belongs to the PSU banks. And I still believe that PSUs are very much technically the structure seems very exciting. First, let's start with the private banks over here. So if I just look at the private bank index, this is a weekly chart of the private bank index. Right from 2007 2008, if you look at the red lines, the most of the previous high breakout has been very convincing. So if you look at all the red lines, 2007 2008, 2015 16, and back again in 1920 levels, these red lines, when the major trend change has happened, the major breakout has happened, the private bank index have seen a huge uptick. Though it be the likes of HDFC, be the likes of Axis, ICICI, Kotak, IndusInd, the every rally, the stocks have changed now. And if you look at the recent rally, most of the contributor have been ICICI Bank, HDFC Bank, ICICI Bank and Axis Bank has been the major contributor in the recent rally onto the higher side. We have seen ICICI from 700 to back towards 900 levels, Axis back from 600, 650 levels back towards the 800 plus levels. So the momentum has been very much stronger for the private bank index. Look at the green channel over here. Most of the channel breakout post this major red lines. If you look at the major breakout happen and then a consolidation form, when this consolidation form break out from the following channel structure over here, if you look at these two green lines, every rise post the red lines, the structure seems, the momentum seems accelerating onto the positive side. So look at again, we saw back in 2011-12 the channel breakout happened, back in 2015-16 the channel breakout happened, and now back again in 2021-22 this channel breakout is coming back very strongly onto the private bank index. So even if you look at the bank nifty is now outperforming, trending above 40,000 levels onto the momentum side. And if I just look at the structure of private bank index, which comprises of even bank nifty comprises of around 75-80% of the private banks. So the private banks are trending very bullish. So one onto the banking space, private bank is the one chart seems very bullish. Coming on to the PSU banks. Now, if you look at the PSU, even if you remember, I've done a video on a decade and I highlighted that this is breaking out. Right from 2017, or I would say right from 2008-9, this is the first time where the higher low structure is coming in place. Now, if you look at this red trend line, the falling trend line right from 2017 highs, we witnessed a breakout in 2022. So nearly, probably I would say 2021. So nearly 4 years, four and a half years of breakout has been there, and convincingly we broke out, retested the level, consolidated for quite long. When markets were trending lower, if you remember from the June highs, the Nifty, if right from 15,200 back to 18,000 levels, the PSU index have been nearly gaining around 40% from its June low. So the outperformance still continues onto the PSU Bank Index. If I just look at the global, or I would say at the all sectoral indices, PSU is the one which is outperforming by a huge margin. Now, at the current point in time, if you look at this green line over here, the ascending triangle structure, the prices have broken the ascending triangle structure over here, trending much higher above this. So 3100, 3200 is the level currently trading at around, and I believe if I just look at the whole rally right from 2020, where it took around 1100 levels and back towards 3000 levels in the form of a pole and a pennant. So if a triangle structure, generally the pennant are basically the symmetrical triangle. In this case we have around ascending triangles, but if I just look at not a textbook pattern, but if I just look at the pole and the triangle, which is the pennant, I believe this is just a start of the fresh rally coming into the PSU Bank Index, and we may see much higher levels. Probably next 1 year in line, I'm expecting this a target of around 4,000 to 4,200, which is another 25-30% in probably 1 year times. And I'm still believe by 2025, I believe this index could test around 6,500 levels, 7,000 levels onto the next 2 to 3 years. So keep a watch in PSU. PSU is the one I strongly believe that it has just a breakout, a resumption in a momentum. And if I just look at the second PSU bank chart over here, this is a point and figure weekly chart, 3% by 3. So which means that every X and O you see on your screen is a 3% X or 3% O. So if I just look at the whole consolidation right at around 3,100, between 3,100 to 2,800 levels, the consolidation have been for a quite time now. And if you look at the quadruple breakout coming onto the weekly scale now, so the structure seems very bullish. And if I just look at as per the pattern, the initial targets comes at around 4,200 and the second target comes at around 6,000 levels. So again, being a weekly scale, being a 3% by 3, generally a long-term chart, and it may take time to hit our targets. But yes, initially I believe 4,200 can be on cards in somewhat 2017-9. And as an investor, you should not miss this PSU bank. And as those who are there in markets for last 10-12 years, they might know that what 2008-2007 brought for PSU bank investors. So they were the one of the most outperforming sector. But since then, I would not say the economic factors, or there are some of the cases which happen into the PSU banks which kept the sector underperforming for quite long. And I think it is over now. 2008 to 2022, 14 years, the sector has been underperforming. So if I just go by the theory of Ram Manvas, I have been discussing this in many videos so far. So The Ram Banwas has been ending on to the PSU Bank Index now, the 14 years, and I believe this is just a resumption in a fresh momentum right from 1100 levels to now 3000 levels. This breakout could take index much higher levels. So keeping a target of 4200 on the index, on the PSU Bank Index, you can look for stocks which have been outperforming, which have been coming up with the strong fundamental data, or the company which is coming up with the lower NPAs and a good called fundamental numbers. So these are the two sectors. I believe the IT index is the first sector, and the banks, which are the these are the two sectors which I think you should focus on in Samvat 2079. And even in banking, I believe that PSU is very much ready to break out rather than private banks. Yes, private banks there, without the private bank, the bank nifty won't move, which could trigger another leg of rally for the PSUs. But yes, comparing with the privates and PSU, I believe PSU is very well positioned for a next leg of bullish momentum, and you should look for a PSU as an investment into the private. So either you can look for a diversified by 50% into the privates and PSUs, and look for the structure where you think that PSU banks are trending much higher with the strong fundamental numbers. So signing off again, wishing you all the happy Diwali and a prosperous New Year's.